All right, kids, we're on our 4-2 work together here. It is a place where we're going to do a departmental margin statement for both of our two departments. You're going to see we have a departmental margin for kitchen and a departmental margin for bath. So let's look at our instructions. It says that we are going to use our adjusted trial balance or our worksheet from Work Together 4-1. So what I do need you to do is you need to open up your 4-1 Work Together in another window. And remember that at this point it should be completed, so you should have the correct answers here. For your adjusted trial balance, this is what we need here in order to complete our departmental margin statement, this bottom part where we have the adjusted trial balance. So we're going to flip back and forth between these in order for us to complete this. So as it says, we've got our two departments, kitchen and bath, and we're going to use this to complete a departmental margin statement for each department. So as we look at this, let's open our kitchen one first. And so you can see what the heading looks like. You will need to know this for the tests and things, so just make sure that you know that it's company name, departmental margin statement, again for which department. This one is the kitchen, and it's for the year ended December 31st. So what we're going to do is we're going to start with our operating revenue. So the first thing that we need is our sales. So if we look at what our sales amount is, we can scroll down here to find our sales for our kitchen. It's $417,953.07. So that's going to go right up in here. 417,953 and 7 cents. Okay. And then we of course have to take out our sales discounts and our sales returns and allowances. So we look at sales discounts and sales returns and allowances. We have both of those numbers right here. So we're going to write back over here and plug those in. We've got $6,655.27. And we have $7,634.77. So what we're doing here is we're actually adding these two together. So we're going to add 6,655 and 7,634, and we end up with $14,290.04. And then again, remember what it's saying up here is that we're going to take sales less our total of those two, sales discounts and sales returns and allowances, and that's going to give us our net sales. So net sales, of course, is the 417 minus the 14,000, and we end up with $403,663.03. Then we're going to come down here. We've got to do our merchandise inventory. So we need to find our merchandising inventory as of January 1st. So when we go back here and look at this, remember that our merchandise inventory has been updated. Remember? This has been updated. This is our ending inventory. So really what we need to go find is we need to go to our general ledger and look at our merchandise inventory for the kitchen. And this $140, $890, this is our beginning inventory. So that's where we need to look to get that. So we come back over here and we put $140,890. And then we grab how much our purchases were during that year. So we come down here, we find our purchases. Purchases for kitchen were $204,164.91. And then of course we're going to take out our purchases discount and purchase returns and allowances. So we just look right over here, purchases discount, purchase returns and allowances. Those two numbers are coming from there. 2,505 and 71 cents, and then $4,925.52. So again, we're going to add these two together, and we end up with $7,431.23. And then the difference between our purchases and those things that we either got discounts or returns on, the difference between those two is going to be our net purchases. So we come down here and our net purchases were $196, $733 and 68 cents. And then if we add those two together, our merchandise inventory to begin with and all of the things that we purchased during the year, that's going to be our total cost of merchandise available for sale. So everything that we had available during the year is what that number is going to be. So that's $337,623.68. Then we need to take out our merchandise inventory as of the end of the year. So this is where we can grab the amount from our adjusted trial balance. So we go to merchandise inventory for the kitchen. That's that $147,084.62. Okay. And so again, we're taking that, it says less here. So we're going to take our total cost of merchandise available for sale, less our merchandise inventory, so what we had left at the end of the year. And that is going to tell us how much we sold. Cost of goods sold. So that's $190,539.06. So when we take our net sales minus our cost of merchandise sold, that's going to give us our gross profit. And yes, we are subtracting those two. So we take 403 minus 190, and we end up with $213,123.97. And then it says that there are just a few expenses we're going to pay attention to. Remember, this is a little different than, it's not an income statement. What we are doing, remember, is a departmental margin statement. So we are only looking at a few expenses. Remember, those are called direct expenses. So we're looking for advertising, payroll, and salary. So you can grab your adjusted trial balance again, and we're looking at advertising, payroll, and salary, the first three there. So we've got $11,900, $5,193.25, and then $59,121.95 for payroll, or salary, I guess. And so our total direct expenses, we're just going to add those three together, and that equals $76,215.20. And then our departmental margin is simply our gross profit subtracting out our total direct expenses. And that's going to give us $136,908.77. Now, the last part of our instructions tell us that we need to complete a vertical analysis for cost of merchandise sold, gross profit, total direct expenses, and departmental margin. Remember that everything is based off of net sales, which it says at the top up here as a percentage of net sales. So net sales is clearly going to be 100%. And so in order to find these percentages, we simply take our cost of merchandise sold amount and divide it by our net sales. So when we do that, also notice that it says we're rounding to the nearest tenth of a percent. When we do that, cost of merchandise sold percentage is 47.2%. Gross profit is 52.8. Total direct expenses is 18.9. And then our departmental margin is 33.9. So again, everything is just being divided by our total amount for net sales. And that's a departmental margin statement for our kitchen. So what I'm actually going to do is I'm going to pause and make a second video because I don't want to have to run out and make another one. So we'll do the other departmental statement for our bath here in the second video.